In this video, I'm going to be going over exactly how much dividend income I made in the month of August from a $200,000 account, and to analyze this, we're going to be jumping into my do-it-yourself investment toolkit and looking at my investment dashboard, things like my dividend dashboard, dividend calendar, and my daily dividend calendar, and like always, we're also going to be projecting out what my portfolio will look like in the future so we can see exactly how long it will take me to one day live off dividend income. And like always, if you'd like to be able to access any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Seeking Alpha for sponsoring this video, but more on that later. So let's go ahead and jump in. And the first thing I want to point out is August was a huge month for me. It was a huge milestone month. If we go ahead and zoom in, we can see my portfolio value for the first time ever touched over $200,000. Now, why did this happen? Well, like we already know, the S&P 500 over the past year has been on an absolute tear. We can see it's currently up 27.24%, and my portfolio has definitely been reaping the benefits over the past year as well. But if we come up here and look at SCHD, we can see at this moment, SCHD is literally at its all-time high of $84.15 per share. Again, come over here, look at this, literally the all-time high. And if we jump back over to my portfolio, we can see SCHD currently makes up around 46% of my entire portfolio. So I've definitely been reaping the benefits of this run-up in share price. We can now see my portfolio in total has seen over $53,000 in gains. So yes, I am a long-term dividend growth investor. I want to maximize my dividend income over the long term. But the beautiful thing about that is when you buy quality dividend growth companies, you're going to see a lot of capital appreciation as well, which I have definitely seen in my portfolio. And as we'll see here in just a little bit, I have a lot of stocks that are up 50% or even 100%, and one stock over 200%. So now if we scroll down, one of the things we'll see is my cash position is currently sitting at about 7%. This is a little bit higher than it was last month, and I actually contributed very little capital to my portfolio this month. Almost all the gains I saw in my portfolio this month are from capital appreciation, which is pretty cool to see. So really my portfolio is up around 3 or 4% in the past month alone. Now what we have to understand is early on, when you start your investing journey, a 3% gain isn't going to seem like much. A 3% gain on just $1,000 is about $30, and a 3% gain on $10,000 is $300. But as your portfolio grows, a 3% gain is going to feel like a major difference. For example, a 3% gain on $100,000 is $3,000. This is simple math and we all know it, but as your portfolio grows, those 3% swings are going to make a major difference. And that's exactly what happened in my portfolio this month. Now, if we come down here, we can see my total holdings is sitting at about 28. A few years ago, this was sitting closer to around 34 or 35, which I definitely felt was too high. And in fact, I'd even like to get it closer to around 25 right now. Now, why is this? Well, there's a few different reasons, but overall, I don't want my portfolio to be over-diversified. Overall, diversification is a good thing. It can allow you to see good returns even if a few specific stocks in your portfolio perform very poorly. But here's what else you have to understand about diversification. Over-diversification can harm your long-term results. When you're overly diversified, you end up putting money into your 50th or 100th best idea, rather than concentrating that money on your top investment choice. So I have to ask myself, would I rather keep putting money into my 29th or 30th favorite holding, or some of my top holdings like Visa, Microsoft, and SCHD? And obviously some of that does depend on valuation, but overall I do want to make sure I'm focusing on high conviction plays. Now if we keep moving forward, we're going to see some of my top gainers in my portfolio like I was just talking about, and start out we can see my cost and market value. This is basically showing how much I put into a certain position versus the current market value. And for example, we can see SCHD, by far my largest position, I put in about $77,840, and right now the position is worth around $94,200. If we look at Microsoft, looks like I put in $8,990, and the current position worth over $14,000. Then down here is one that's impressive, Broadcom, AVGO, my biggest gainer. I put in about $1,620, and right now it's worth over $5,000. So if we bump over to my growth chart, we can see on my Broadcom position, I'm currently up close to 218.5%. So this has been a huge gainer in my portfolio. But I also have a few other positions that have done really well. Look at this. JP Morgan, I'm up over 111%. Caterpillar, up over 102%. Jefferies Financials. This is not a stock I see talked about very often, but a few years ago I saw Warren Buffett added it to his portfolio. I started analyzing the stock and I actually really liked what I see. Now, I don't just buy stock because Warren Buffett bought it, but it is a good place to start looking. And this is one of the few instances where I actually did buy the stock, and I'm already up around 96.6% on this position. But there's plenty of other positions that have performed really well. We can see EPD. This is one of the few high yielders I own in my portfolio. I'm up 49%. Coca-Cola, 55.39%. Altria, currently up around 35%, and we can see Microsoft up around 59%. Bank of America, 51%. Come over here, we can see Lowe's, 41%. If we keep moving forward, we can see Visa, one of my largest positions, at 25%, and Texas Instruments, 45%. Come over here, we can see Apple at about 68.5%, Waste Management sitting at about 36.13%, and UNH, my most recent addition to my portfolio, close to 30%. So I'm really happy with the gains I've seen in my portfolio this far. Now, we have to understand, again, I'm still a long-term dividend growth investor, so while it is fun to see gains over the short term, for example, UNH, I just added it earlier this year, I am already up 30%. But even if this stock was down 30% since I added it, I would be okay with that because I'm planning on holding for the long term. I love the underlying fundamentals of the company, and I believe in their ability to continue to increase the amount they pay out in dividends every single year. So as a dividend growth investor, I don't have to worry quite as much about market fluctuations. For example, earlier this month, we saw the market had its largest single day sell-off in about 2 years, and there was panic everywhere in the market, and I wrote about this in my free weekly newsletter. The biggest companies in the world were going down by a large amount. Microsoft was down 3.5%, Nvidia 7%, Apple 6.5%. There was blood everywhere in the market. So for a lot of people, panic began to ensue, but this really didn't bother me any, and in fact, it's actually a good thing. Because I invest for the long term, market downturns are actually opportunities for me to continue to buy stocks at good valuations, and I also reinvest all my dividends, so all my dividends get reinvested at lower prices. But again, I also own stocks that buy back shares, so these companies were probably buying back shares at better valuations as well, boosting my ownership stake in these companies. So when I see a huge red day like that, it doesn't bother me at all. In fact, it's really good news. Now at the moment, we can also see my biggest loser in my portfolio is INTC. Now this is a very small position in my portfolio, but it's definitely down quite a bit. I'm down 43.29% on this position. And then if you watch last month's update, I sold 2 positions that pretty much I saw 0% gains on. Now if we zoom back out, let's talk about diversification for just a moment. Let's go ahead and look at my largest positions in my portfolio. If we zoom in and look at this broken out. Now, SCHD, the Dividend Growth ETF. This is a well-diversified ETF with over 100 holdings, focused on stocks that are constantly increasing their dividend payouts over the years. So this dividend ETF falls in really well with my long-term goal, so I'm completely comfortable with it being a very large position in my portfolio. But the other 2 largest positions in my portfolio are going to be Microsoft, sitting at about 7% of my portfolio, and then we have Visa at 5.5% of my portfolio. These are companies with very low starting yields. For example, if we jump over to my dividend breakdown sheet, come up here and plug in stock ticker V, we can see Visa currently has a starting dividend yield sitting at about 0.76%. So that's a very low starting dividend yield. But you have to keep in mind, I'm not just buying dividend stocks for the dividend that they're paying out now, I'm buying them for the dividend they're going to pay out in 10 years or 20 years. And what I mean by this is Visa is constantly rapidly increasing their dividend payouts. Look how much they were paying out in dividends in 2013. It was 35 cents. And if we look at how much they paid out in 2023, $1.87, and this year it's going to be about $2.08. So people who are buying Visa stock thinking about the dividend 1 decade from now were greatly rewarded. And we also have to keep in mind, because Visa is such a quality company, over the past 10 years, they're up 412%. And that's why I'm so comfortable with owning lower yielding stocks in my portfolio. I'm thinking about the dividend they're going to pay 10, 15, 20, or even 30 years from now. Now, other than that, everything else is fairly well diversified and somewhat similar. We can see Lowe's is a decent position at about 3%, and then Vici, this is a REIT, and this one actually has closer to around a 5% yield, currently 4.5% of my portfolio. And then if we scroll down, we can see my allocation by individual industry. Now, I do have SCHD off by itself, just broken out into ETF, and that's technically not correct. But what we'll see is if we jump over to Seeking Alpha and look at SCHD and look at the holdings, you can see this is very well diversified ETF. But other than that, we have technology at about 16%, real estate at 7.5%. We can see financial services about 10.6%. We also have consumer cyclical at 6.2%, and if we come up here, healthcare at 4%, and consumer defensive at 4.6%. Then a couple small positions, if we look right here, energy at just 0.5%, and then we have industrials at about 3.5%. Now here on the investment dashboard, we also have my future portfolio outlook, but we'll come back to that a little bit later. But now I want to get to what everyone wants to see, and that's how much dividend income I made in the month of August from a $200,000 portfolio. So let's go ahead and jump over to my dividend dashboard and start breaking this out. Now what we can see is right now, my expected yearly dividend income, if I were to make any changes to my portfolio, if I didn't reinvest any of my dividends, my expected yearly dividend income would be $5,931. I'm pretty happy with where that's at, and we can also see my average monthly dividend payments is getting very close to a huge milestone of $500. My average monthly dividends is now sitting at $494.31. Now this bumped up this month, yes, because I added a little bit of capital to my portfolio, but not that much. But in reality, it bumped up even more because I'm reinvesting dividends and because the stocks in my portfolio are increasing their dividend payouts. For example, one of the higher yielding stocks I own in my portfolio is Altria Group, and this is a company that this past month announced a 4.1% increase to their dividend payout. So this was a pay increase for my personal portfolio. We can now see that Altria is now paying me $363.53 every single year, which is even higher than it was a month ago, all because the company decided to increase their dividend payout. Now, here's what else is really interesting. If we go over to Seeking Alpha, we can see Altria right now, if we look at them, their starting dividend yield is sitting at about 7.67%. But if we jump back over to my personal portfolio and look at my dividend yield on cost, let's go ahead and zoom in and scroll down. We can see right here, my dividend yield on cost for Altria is actually sitting at 9.27%. So why is my yield on cost higher than the current starting dividend yield? And there's a couple of different reasons. First off, if you can buy a stock at a good valuation, a lot of the times the starting dividend yield will be higher, which can boost your yield on cost long term. And that is one of the reasons my current yield on cost is much higher than the starting dividend yield for Altria. But the other reason is what I just mentioned. The company is constantly increasing the amount they pay out in dividends. They just saw a 4.1% dividend increase, which increases my yield on cost. We can see some other examples of this in my portfolio. For example, the dividend growth ETF SCHD, I have a yield on cost of about 4.07%. If we look at Broadcom, it's 4.04%. And if we look at what their starting dividend yield is, it's much lower than my yield on cost. It's sitting at about 1.33%. That is a major difference, all because I bought it at a good valuation and the company is constantly increasing their dividend payouts. Now, if we go ahead and jump over to my dividend income chart, my historical monthly dividend income, we can see in the month of August, this is one of my lower months, and this is pretty typical, but I made $171.20. Now we can see we kind of have a trend going on here over the past year. We have a high month followed by a lower month, then a slightly lower month. So this was expected to be one of my lower months. But we can see 2 months ago, I actually made $1,108.17 in dividend income. And I've just recently had 2 lower months, so my next month is projected to be a really high one. So I'm looking forward to seeing what that'll be. Now, one of the questions I often get is why don't I just put all of my money into high yield savings accounts? A lot of them are currently yielding around 5%, which is actually a little bit higher than my dividend portfolio. But again, it goes back to dividend growth. You have to understand, I'm not putting my capital into stocks for the dividend they're paying now, but for the dividend that they're going to be paying 10, 20, and 30 years in the future. That will provide me with far more income than a high yield savings account ever could. But also, because of the capital appreciation that I can see, like I pointed out earlier, I've already seen over $53,000 in gains from my portfolio. If we scroll up a little bit further, we can see my portfolio value over time. We're seeing some steady growth, and especially a lot of growth in the past 2 months due to how well SCHD and the other positions in my portfolio have been performing. Now, if we keep scrolling down, we can see actually what's one of my favorite things to look at. Let's go ahead and zoom out just a little bit. And that's my projected annual dividend income chart over time. This is telling me each month how much I'm projected to make in annual dividend income. And again, last month it was sitting at about $5,860, and this month we're now sitting at $5,931. So we've come a long way since I started publicly tracking this portfolio. Back in September of 22, my projected annual dividend income was $1,345. Even this year, we've come a long way. Starting out in January, we were sitting at $4,956 in annual dividend income. And if we look at where we are now, again, we are sitting at $5,931, which is $494 on average every single month. So again, getting close to that huge milestone of $500 on a monthly basis. Now, the last chart that I want to point out on my dividend breakdown sheet is my dividend income by industry. And this is something a lot of people don't track, but I really think they should, because here's what you have to understand. You don't want all of your dividend income to be coming from any one industry or any one place. So even if it feels like you're properly diversified, for example, maybe I own 10 different real estate stocks, you may feel diversified, but all that income could be coming from one single place, leaving you exposed to a disaster. So again, pay attention to where dividend income is coming from and making sure it's properly diversified. Now next, I want to go ahead and jump into my dividend calendar. But first, I want to say thank you to Seeking Alpha for sponsoring this video. And Seeking Alpha is one of my favorite investment platforms, as you probably already know. I've used them quite a bit in this video already, but they provide direct access to a lot of important information. They give you direct access to other people's analysis on stocks, and you can also get breaking news on stocks. But they also provide great insights on dividends. For example, if I click on dividends, we can see a dividend scorecard right here, a quick summary of how much the yield is, the payout ratio, their 5-year dividend growth rate, and how long they've been increasing dividends. That's some really good insights you can immediately get, but you can break this down even more. If we click on dividend yield, we can see dividend yield metrics. We can see how the dividend yield has changed over time, and then yield on cost. This is something that I was just talking about, but we can see what your yield on cost would be based on when you invested. So for example, if you bought Broadcom 10 years ago, your yield on cost would now be 23.9%. Again, that way beats savings accounts. So if you want to try out Seeking Alpha, you can get a free trial and a $25 off discount at the link in the description. Okay, so now we are looking at my dividend calendar, and the idea behind the dividend calendar is actually pretty simple. It basically tells me how much each position is paying me in dividend income, how much I've made each month, and how much each position has made me in total over my holding period. But most importantly, it allows me to see dividend growth over time. And this is something I talk about pretty frequently because it's so important and it helps keep you motivated. And the best example of this is Realty Income, because they pay dividends every single month. We can see in January of 22, Realty Income paid me $5.83 in dividend income. But if we move forward all the way to December of 22, it jumped up to about $7.61. So it's increasing every single month because the stock increases their dividend payouts and because I reinvest dividends. If we move forward just a little bit more, it jumps up to $21.36. And then if we look at the most recent month, it was $27.36. So every single month, the amount I receive in dividend income from Realty Income is increasing. So let's go ahead and look at how much each stock paid me in the month of August. EPD, one of the few high-yielding positions I own, $19.46. Realty Income, like I just mentioned, $27.36. We have Starbucks at about $17, Lowe's close to $28, JEPI about $7.50, Texas Instruments $43, Caterpillar $5.83, Jefferies Financials $20.44, and then we have Apple at $2.53. So again, this was one of my expected lower months, but next month should be one of my highest months ever. And then if we move forward, we can see my daily dividend calendar. This tells me each day how much I made in dividend income. So again, we can see each dividend payment I received in the month of August right here and how much they paid me. Now, so far in 2024, my highest month of dividend income was $890.85, and this was when SCHD paid out their largest dividend payout ever. We can see so far, 2024, I've received over $3,204 in dividend income. I'm actually getting really close to what my total for 2023 was, and we're only 8 months through the year in 2024. But here's what's really impressive. If we look at my 2022 daily dividend calendar, I received about $1,289 in dividends. So I've already way surpassed that in 2024. Now finally, I want to project what my portfolio will look like in the future. And I've built out this portfolio projector to see exactly when I'll be able to one day live off dividend income. So you can see the assumptions here. My starting portfolio size is currently sitting at about $200,000. I'm assuming a 7% price growth rate and a 7% dividend growth rate. And the aim is to make $2,500 monthly contributions. Now, that's the average I'm going for. It is a little bit high. Some months will be higher, some will be lower. And for example, this month was definitely lower. But if we jump over to my cost of living, we have to understand the goal for my dividend income on a monthly basis is to be higher than my monthly cost of living. So for example, if the monthly cost of living is about $4,000, I'm going to be needing to make more than $4,000 every single month in dividend income. It seems like a big goal, but compounding is working for you. But you also have to understand, inflation compounds over time as well. So if we go with the historical average of 2%, I know lately it's been quite a bit higher, but that is the historical average. We can see 30 years from now, your monthly cost of living could be as high as $7,245. So your dividend payments have to continue to grow at a rate higher than inflation. It's why it's important you buy stocks that are increasing the amount they pay out in dividends at a rate above inflation. That is a key concept. But if we jump over to my live off dividends analysis, we can see this black line here is my monthly cost of living, and the red line here is my monthly dividend payments. And the point at which that line passes the black line is where I can live off dividend payments forever. So let's go ahead and see exactly where that is. Let's go ahead and zoom in and start breaking this down. If we start scrolling down, we can see about 5 to 6 years from now. We'll look at 6 years from now. I still can't live off dividends, but my monthly dividend payments could be as high as $1,803. But unfortunately, at that point, my monthly cost of living would be about $4,500. So we need to keep scrolling down. If we look at where I'll be around 10 years from now, or let's say even 11 years from now, I could be making around $3,584 in dividend income, but my monthly cost of living will be $4,973. But if we scroll down just a little bit further, we can see right here, this is the first month in which I'm expected to be able to live off dividend income because my monthly dividends is now higher than my monthly cost of living. Now I know what you're thinking, aren't you going to quit reinvesting dividends at that point, meaning you can no longer live off dividends? That's actually not true, and let me tell you why. As long as your dividend growth rate is higher than the rate of inflation, you can live off dividends forever. That's because my monthly dividends will continue to grow at a rate above my monthly cost of living. So if we go ahead and zoom out quite a bit, let's jump back over to my investment dashboard and get a breakdown of what this portfolio outlook will look like. I'll go ahead and zoom in and we'll take a look at this. We can see 5 years from now, I could be making around $18,500 if I reinvest dividends, and 15 years from now, around $70,000. But if I don't reinvest my dividends, it changes pretty drastically. For example, 15 years from now, it would drop all the way down to $46,688. And 30 years from now, if I don't reinvest dividends, I'd be making around $156,000, which is pretty good. But look how much it changes if I do reinvest dividends. It jumps all the way up to $363,000. It's pretty remarkable what a difference that can make. So there you go. That's exactly how much dividend income I made in the month of August from a $200,000 portfolio. Again, if you'd like to be able to download any of the spreadsheets you saw in this video and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.